Understanding prime brokerage, essential services for hedge funds and large investment clients. Introduction. In the complex landscape of finance, prime brokerage represents a crucial set of services offered primarily by investment banks to hedge funds and other large investment entities. With a history dating back to the 1970s, these services have evolved to meet the needs of sophisticated investors looking for ways to streamline their trading operations, access capital, and leverage their investments effectively. What is a prime brokerage? At its core, a prime brokerage provides a bundled group of services that cater to large-scale investors who require extensive support in managing their investment portfolios. Unlike traditional brokerage firms that mainly facilitate transactions, prime brokers offer a range of value-added services, allowing hedge funds and institutional investors to focus on strategy and investment objectives while outsourcing operational tasks. Key takeaways. Services offered. Prime brokerage encompasses a variety of services including securities lending, leveraged trade execution, cash management, and risk analysis. Client base. These services primarily target hedge funds, money managers, and institutional investors such as pension funds and commercial banks. Account requirements. Prime brokerage accounts typically have high minimum requirements, often starting at $500,000, with significant benefits being offered to clients maintaining $50 million or more in equity. Detailed prime brokerage services. 1. Securities lending. Prime brokers facilitate the lending of securities, allowing hedge funds to borrow assets to engage in short selling or other trades that involve leveraging their positions. This service often requires collateral from the borrowing fund, which mitigates risk for the prime broker. 2. Cash management. Through cash management services, prime brokers streamline banking functions like cash flow analysis, fund transfers, and transaction management. This allows hedge funds to manage liquidity more effectively. 3. Trade execution and leverage. Prime brokers assist in executing trades, often providing leverage that allows funds to increase their position significantly with a smaller initial investment. This can amplify returns but also increases risk, thus highlighting the importance of effective monitoring. 4. Risk management. Understanding and managing risk is pivotal for hedge funds. Prime brokers offer analytics, reporting, and tools for assessing risk exposure, enabling clients to make informed decisions about their investment strategies. 5. Capital introduction. Many prime brokers engage in capital introduction services, connecting hedge funds with potential investors. This support is crucial for funds looking to expand their investor base, as it often leads to more significant inflows of capital. 6. Concierge services. Some prime brokerage firms extend their offerings to include concierge-style services, which can encompass office space, administrative support, and other business facilities that enable hedge funds to operate efficiently. Who uses prime brokerage services? The typical users of prime brokerage services are large institutional investors, including but not limited to hedge funds, often rely on prime brokerages for operational support, financing, and risk management to enhance their investment strategies. Pension funds seek to invest large sums but may lack the internal resources to manage investments independently. Commercial banks engage in prime brokerage to manage their large cash positions while seeking investment opportunities. Account requirements and fee structure. While the entry point for prime brokerage services can start as low as $500,000, this threshold often does not provide access to substantial benefits. Many prime brokers prefer clients with account balances around $50 million or higher to grant access to comprehensive services and discounted trading fees. The fee structure varies according to the services used, the amount traded, and the client's specific needs. Revenue generation for prime brokers typically includes service fees, charged for various operational and management services provided. Commission on transactions, a fee based on the volume and frequency of trading. Lending charges, Fees associated with borrowing securities to fund trades. Example scenario. Consider hedge fund ABC, which has launched with $75 million in capital. They engage J.P. Morgan's prime brokerage services to handle cash management, risk analysis, and net asset value calculations for a monthly fee of $20,000. As the fund grows and diversifies its strategy, it utilizes J.P. Morgan for securities lending and capital introductions, paying a percentage for these additional services. Frequently asked questions. What is the difference between a broker and a prime broker? A traditional broker assists clients in buying and selling securities, while a prime broker offers a comprehensive suite of services specifically tailored to the needs of large institutional clients. How much do prime brokers charge? Prime brokers have their own fee structures, often based on trading volume and the range of services used. Fees can vary significantly from one prime broker to another. What is margin financing in prime brokerage? Margin financing occurs when a prime broker lends money to a client to increase purchasing power. The client is then responsible for making margin payments and adhering to agreed lending limits. How does a prime brokerage generate revenue? Revenue is generated through service fees, commissions on transactions, and charges for securities lending, among other avenues. Conclusion. Prime brokerage is a vital component of the financial ecosystem, particularly for large institutions that depend on these services for efficient operations. By allowing clients to outsource numerous trading activities and operational tasks, prime brokers enable hedge funds and other major investors to concentrate on strategic goals and investment performance. The increasing sophistication of investment strategies makes the role of prime brokerages even more significant in today's dynamic market landscape.